All right, welcome to the weekly Sunday market review with Kenny and James. Today is the 15th of June, and so we're just going to go through the usual pairs that we discuss. Obviously, it's just our thoughts on what we think about the market and what we're doing, and we're sharing it. It's just for information purposes. Nothing here is financial advice. We don't know what your circumstances are. We don't know how much money you have, what your bank account looks like. So we're not financial advisors here. We're just sharing our thoughts on the market. Okay, so with that out of the way, let's get into it. We start with the US dollar. So usually I start with the monthly, but the monthly is not ended. So, I'll just touch briefly on it and say what I think. Basically, it's still a downtrend for me on the monthly chart. So downtrend still going down. There is a pink candle which I've highlighted, which on the daily chart, which needs to be exceeded, which is sitting here. So that's my initial area of interest. So I think there's still some more downside, and then we step it up to the weekly. We can see that currently we've just closed just on the KC channel. We're also outside the Bollinger, which is the blue line. So there's more downside, unfortunately. I mean, we might have some bounces, but I think that we'll go down one more time at the very least before we start to see any form of correction. The We're going to also have a dead cross incoming, so that dead cross is coming. So we may, it may kind of try to come back up again, maybe to about 98, somewhere there, come and test back these bottoms here, 98 7 somewhere there, but it should still continue going down to exceed this pink candle which is sitting on the daily chart. If I bring it here, you see it's it's sitting right is it here, or is it on we're not on the daily. Yes, we're not on the daily yet, the daily chart. So let me just bring it so that at least you see what I'm seeing. It's sitting somewhere here, and here we go. There we go. That's that bad boy there, sitting there, which is not being recovered. And I think James would say this is a break, probably, if we mark it, and James will love me for this because I'm listening now to what he's saying. So I'm sure if we go to the hourly chart, I'm going to have a look at it. If we can bring that particular line somewhere. Let me make this bigger, and then I can just let's make this so we can see it. Go, keep going, keep going, keep going, keep going. I should have actually watched the date, and then I could have just put a date time frame into it. This thing is gonna take too much time. We don't want to spend too much time today. So if I can't find it on this hourly chart, maybe let me try 4 hours and see, maybe 4 hours might show it quicker, then we'll probably have a look. Otherwise, you'd have to find it on your own time. There's a break somewhere. Okay, here we go. So, and now we can go and bring the PVS array candles up, which is at the bottom here. And you can see these bad boys. Oh, mm. You can see these bad boys here, and there was a break, right? So there was a break. So this definitely will be revisited at some point, which is one of James's strategies, which is really good. So I expect it to really come back into that zone before we go anywhere to the top, to the upside. So um, that's what I think will happen with the dollar. We may bounce, cut dead cat bounce or whatever people might call it. We may have that, but I don't think that's going to last. So I'm going to pass it back to James, and then he can share his thoughts as well.
All right, I'm ready. Yeah, so I think we're going to spend a little bit of time in this area that I have highlighted with the yellow highlighter function, between 99.9 and 97.4. When we kind of fill out this circle to like 75%, I do believe we will see the trend change, whether we want more downside grinding of this lower megaphone band or we're ready to break out. And I think we'll see that probably around mid-August. But until then, I think we ping between these Fibonacci's, which is the 0.786 and the 0.618. You guys can draw this on your screen if you take the low from, let's see, 29th of January 2018, the high of the 2nd of March 2020, and then the low of around March 15th of 2021. And that is a Fibonacci extension because, well, technically it shouldn't be an extension. It's kind of already played out. That's why I still have it on the screen because the 1.618 was such an important marker that I left it up. But usually, after the move, you usually go into a retracement, and then that is obviously the retracement of the move. But because the 1.618 had such weight on it, I figured I would leave it up, and it's been a good price range for us as we ping off of some of these uh, Fibonacci lines. So I expect sideways going into mid-August, and then we're either going to go lower for a little longer. I think probably like a 96.5 low, or and I just say that because this line has been so strong, and we're probably going to ping off it again going into Monday. So for us to break this, yeah, we probably will get Kenny's targets of was that around 89? I think we would probably see that. But as long as we're above this line and we're kind of just grinding against it, I think we'll have some some up later on in the year. So that's all I got for Dixie.
Okay, so we're looking at the next pair, which is the Nasdaq. Now, the Nasdaq, and I'll take it back to the weekly chart, and we can have a look at some of these things that's playing out. So for me, the Nasdaq is still, you know, bullish, but I think there is a potential pullback because we've had this red candle on the weekly chart. So last week we said it will go up, and we've gone up. Unfortunately, we couldn't close outside the Bollinger, which is this blue line. So we've been rejected off the band. So I'd expect that presumably we may come back, come back and touch this nine moving average, maybe somewhere here, somewhere around like if I just move this down to here, like 2893, somewhere there. We may come down to that zone and then hopefully continue going up. If it gets worse, then there's a gap here, which will be filled on the weekly chart, which is possible, but would have to wait to see how the first few days of the week plays out. If I go to the daily chart and look at the daily, you've got a very big red selling candle with a big volume. Now, as I don't with these sort of red big selling candles, if we're able to just go down below it, chances are you bounce up the other way. Like here, like even like this one here, big selling volume candle, you go down, then you continue going up, big selling volume candle, double bottom or go slightly low, then reverse back up. So if we go below this, I would be expecting a move to the other side. Or we could just technically, based on the fact that we've got a rejection of price at the bottom, it could be like this one here, where you just continue going, creeping up. So this daily chart has got two potential options for me. Is that, because we got a rejection candle, I'm probably more inclined to say we might end up going up on the daily chart. And also we've got a golden cross happening here, where the 50, this is the 50 SMA is crossing the 50, the 200 EMA. The small one is the 200 EMA. So that's a golden cross. But this cross shouldn't give us a big boom. It's normally this one, the big fat red one, and this one here, that should be give us the big boom. So I think we might probably end up going up. And if I step into 4 hours, we've got a pink candle on the 4 hour chart. So uh, chances are, we may come down slightly below this, and then potentially continue going up. So we would exceed this pink candle and then continue going up. So I think based on what I'm seeing on lower time frame, 4 hours to, comparing 4 hours to the daily, we might have a slight move to the downside and then continue going up. I think it's going to maybe catch a few people off that okay, this is a collapse and everything is going to die, and then they'll just run it back up again. Um, the stochastic RSI is still at the bottom part of it, even on the 4 hour chart. We're not at cycle high. So I think a small move to the downside and we continue grinding up would be what I say on this on the Nasdaq for next week. It could be something like this as well. So like here, we had a pink candle show up and we just go down a little bit and then we can correct and go up. So I'm expecting more upside, even if we have something like this. And you can see here we were slightly on the 200 on the 50 EMA, so we came down to the lower Bollinger. We've already come touched the KC channel, which is the white one, and we bounced off. And so any small move back to maybe um, the BB band here, which is the blue one, and then you continue going up. So I'm not bearish, I think there's still some more upside on this chart. And I'm going to leave it there and pass it over to James to share his thoughts as well.
Yeah, so same as last week, but we'll blow it out to the monthly time frame. Don't mean to continue to beat a dead horse here, but you can see the sequences of what's been going on. This is very specific to the since 2018. This isn't like a decade long pattern or anything, but as far as since 2018, we can kind of map a little bit of a pattern that's been going on. So after we have this originally was set on the lower daily Bollinger Band. So it's not this originally this strategy that we've been studying was set up on the daily, and these circles were lower Bollinger Band touches. But when we blow it out to the monthly, we see that the lower Bollinger Band touches turn into midline VWAP touches. So that's why this is a couple $100 off here. But anyways, we have one, two, three, four. Each touch encompasses a three-wave pattern. So one, two, three, and then we're going to go down again and touch the midline. One, two, three, we're going to go down and touch the midline, and it just continues to happen over and over again. So now I'm not saying that this is the end all be all answer to the problem, but as it sits right now, I'll probably trade this pattern. There's no reason to go against it. Um, when you see something like this, you know, there sometimes overcomplication of things can really be a detriment to your trading. So just having a nice monthly um, strategy that you can put on a chart like this and prove to your friends that, it makes sense and you have a thesis behind it, that's really going to help your trading. Whereas, when you get into the hourly and the dailies, you kind of lose sight of this 7 year long sequence of events that's just been happening over and over again. And this is really basic stuff here. I mean, there's nothing really too crazy about what we got going on here. So as it sits right now, I'm just going to be bullish on the Nasdaq until like mid 2026, I guess. I mean, unless we break down below these blue steps, because what I'm forecasting is these bands are going to start to angle up like this. And it's going to create a channel that we are going to ping pong in between. If we go down to 20,300, it might be scary for some. I mean, we have a gap down here, got another gap right here, but this one is a little less likely. So if we go and we fill this gap, as you can see from our blue line, this is forecasted. This isn't going to take us by surprise here. We're ready for them to come take this gap and come down to that midline VWAP beginning of July of this year. We're going to be ready for it, and we're going to be taking long positions at that level because once again, when we go back out to that monthly, there's a sequence of events that's been happening, and it can get kind of hairy in the daily, but we're gonna stick with what we think and what we know, and we're gonna be ready for that 20,300, and we're also gonna be ready if price wants to just roll and grind on this upper Bollinger Band from now until September up to 24,000. But if we do that, we have to understand that there's going to be an aggressive move down. That's usually what happens. But if we kind of nice and easy just melt side and up and side and we consolidate on our way up, this is going to be less likely, less of a nasty pullback right here. So if we find ourselves at the top of this and there we haven't had any consolidation and it's been a straight bull run, expect for things to get nasty at that $25,000 level. But if we consolidate on the way up, it looks healthy. There's no PVSRAs on the 1 hour, then we can kind of be a little bit more secure in our longs. And then, the same thing is going to happen once we get up here, we're going to come down no matter how aggressive it is, and we're going to touch this high that we just made. And we're probably going to bounce off that high and then continue to go up into our wave two. So that's what I'm forecasting for now. If we go lower, I think our bottom is going to be this midline, which is at about 20,000. I do not think we go below 20,000 under any circumstance. And if we do get to those levels, that would be a great buying opportunity. But unfortunately, for the people that want lower prices, I think we hang around this upper Bollinger Band and kind of just grind up, and then we're going to hit that $25,000 level, and it's going to be a red day. It's going to be a 10%, 11% down day. The weeks after are going to be, down 10% because the sellers, they made money quick and they're going to take advantage of that. So that's all I got for NASDAQ, sir.
Okay, so let's look at the SPX, the next pair. I think we won't spend a lot of time on this because it's very similar to the Nasdaq. So the only thing I would say is, we do have a pink candle here on this 4 hour chart, which probably could be taken before you continue the journey to the upside. So maybe it could come all the way to 5,900, 5,890, somewhere there, to this 200 moving average. You could test that before you continue going up. And now I can step it back to the weekly, and you see the weekly we have again, it's very similar to the Nasdaq. We kind of, last week we drew this block last week. We didn't get to it, but you can see we came very close to it. So this week I probably would just move the box into here, somewhere there. Yeah, we could touch the 9, which is here, sitting here around 5,820, between I think 5,820 and the bottom of this point here, 5,887, somewhere there. I think we could do a pullback and then continue the journey to the upside. If it gets really bad, like James was saying, then you might come and close this gap here, which is sitting around. I think the gap sits around, if we put it somewhere here, 5, 6, 7, 8. So if it gets really bad, but I don't. I mean, I agree with James. I don't think we get there. I think the only reason why we've had this pullback is because you're gonna have going to be having a golden cross, and this golden cross, once it happens, we're gonna pull back properly. But so I would probably expect we could go up from here. We could just continue grinding up, and then after the golden crosses happen, This one happens, this one happens, this one comes up. And that probably by then, as James says, we'll be at around that 5,000. We could be way up about 6,000 something by the time all those events take place. So, I'm not bearish at all, despite the fact that we've had this candle, a small pullback back to even the 200 moving average, which is around 5,821, is not a big deal. And this thing will still go up. So, that's all I go on this. I don't want to spend too much time on it. So I'm going to pause and let James share his thoughts quickly.
Yeah, so not to go too deep into this, if you want to kind of see who's going to be the leader in this next little bull market, just a little thing you could do. You could put, if you can remember from Nasdaq, we're kind of above, below that upper Bollinger Band, whereas SPX is just below. So if SPX is going to be stronger than the Nasdaq, we'll put an S up here for stronger. I think we have to get above this red line here. If the S&P is going to lead this move, I do believe we have to jump this red line. But if we're going to kind of trail behind and be a little weaker than NASDAQ and let NASDAQ take charge, I think we spend time under this red line here. So nothing too crazy. Same thing with NASDAQ. I'm just curious to see who's going to move this market. We've seen NASDAQ move it for the past 7 years now. Um, and I'm just curious to see, is that going to last forever? If we start to see S&P start to blast off above this upper Bollinger and our Nasdaq is still below the upper Bollinger, we can kind of get an idea of who is leading this market. So, it is the same formation, the same sequence with Nasdaq. It's just as it sits right now, Nasdaq leads the charge and it has for the past 7 years. But if the S&P is going to start to lead the charge, we're ready for it and we are going to be able to map that out. And I'm just, like I said, I'm just curious to see if we're going to continue following Nasdaq and S&P is going to trail behind. So that's what I'll be watching for with S&P. My investments, this isn't financial advice. This is just what I would do. My investments would stay mostly in Nasdaq and Bitcoin right now. If we start to see crazy moves over this upper Bollinger, I might start to put some of my Nasdaq fund into the S&P fund, but as it sits right now, it looks like S&P is still playing catch up with its big brother Nasdaq. So that's all I got.
Okay, gold. So there are some good things that obviously is happening on gold. Gold is above the Bollinger Band, so that blue line is closed above it. So normally, if you have a close, um, you tend to go slightly higher first. So I'd expect us to continue to grind up. I think potentially a double top at 3.5 is on the cards. Now, and then we can see whether this is just a fake out to come and knock some stop losses at the top here, and that's the end of the move, or is it going to start going into another kind of parabolic move to the upside? What what I what I think, and this is just what I think, is normally for the moves to be quite extensive, you can see, you don't have to be a rocket scientist to see this. If we start going up, this yellow line, which is our middle KC channel, that's the middle of the KC channel band. We each time we go out, we come back, we play around the Bollinger Band, the KC channel, we come back to it, right? Then we go parabola again. Then we come back to it. We haven't come back to it yet. So I wouldn't expect this move to be like this one here. I wouldn't expect it. So I'd probably expect that maybe this move takes us to a double top slightly higher and then corrects itself and comes back to this yellow line and consolidate around it like we did here, consolidate it for a while, then go for another leg to the upside. So I'm short-term bullish on gold that yes, we do have maybe a double top, a slightly higher high. So I'm going to move this, but ultimately this box will be filled at some point. But for now, let's move it to that place here so that next week when we do our call, we can see where we landed. So somewhere there, and I think, I probably will take a few shots here at the top here. I may open some shots at the top here and then see and then put a stop loss on it in the event that my trade is wrong. But when you go outside these bonds, you don't stay outside it for too long. Like here, maybe you might do 3 weeks in a row, but you come back into the band. Like here, 3 weeks in a row, come back into the band. Like here, couple of weeks, come back into the band. So even if it goes slightly higher, I might just short some more rather than, closing my trade. So that's all I've got on gold. And I'm just going to pass it to James to share his thoughts.
So I'll first come out and say I am not a gold trader. Kind of new to trying to trade gold and what it does. But to get into the hourly liquidity time frame, I'm going to put a blue box around our liquidity. Obviously, we're not going to have mappable liquidity above all-time highs because that's an oxymoron. It doesn't exist. Price has never been there before. But what we do have is the top that was created is creating a magnet towards price. So, a lot of people might think that oh, we're going to move back up. We're going to go back into all-time highs. Now, that's very well possible, but what they fail to realize is what's magnetizing price back up into the zone is this wick of unfilled liquidity. Now, what is a reason that you sometimes see that price will go just a little bit past the wick and come down? Well, there's a number of reasons. People like to put their stop losses above those wicks. A reason that not a lot of people talk about is there is the 2.618, but slightly before that, there is a Fibonacci extension called the 2-spot 1-2. So those, I've seen it before. They both like to get hit. That's why sometimes, and I could sit here and I could look at this chart for, however long you want me to look for, and I could find an extension off of a base, like a good base move, a clean move. I can find a top, a low, and another, or I could find a low, a top, and another low for my extension, and I could find where this is a 2-spot 2-1-2, and we're going to go up and we're going to try and go for that 2.618, which is going to be somewhere maybe around 3,500, 3,600. Okay. That's very possible. I haven't sat and looked at gold and studied gold like I have other assets. So how likely that is, I don't know. But in commodities in general, I do see that 2.12 kind of make people start to think that it's over. And then we go touch the 2-spot 618 and then the party's over. And that's when people are FOMOing, thinking it's going to go higher, when in reality, it's just a couple percent more. So we are on the daily. Let's go into let's just stick to the daily for now. So I think we go up and kind of crush some of this liquidity in this level. I am curious about the volume signatures. Like we said, this volume has really been heating up. You can see our threshold just turning up and turning up. This is a bullish candle here. If you guys can remember, I was hesitant to call a top on something so bullish like this. If you want to zoom out a little bit, I mean, this thing has been cranking up. So there is so much buying pressure behind this asset, and you have the dollar failing, per se, and then you have a global conflict. So I think all those things are going to be bullish for gold. Are we going to really break out and bust out right here? I mean, it's possible, but I just want you guys to be aware of, kind of a reason why price is creeping up like this. It's because there's liquidity still left on the table. So it's good to know that there is a hammer, a proverbial hammer that is waiting to strike the head of this nail as we creep up, through this floor. We're creeping up through this floor and we got this blue hammer waiting for us. So if we can get past this level, it's going to be really good for gold. If we get here and it kind of shrinks us down to kind of this lower blue line here, and we can turn back up off that line and then go higher, that's going to be very bullish. If we're going to keep cranking higher, there's going to be not a lot of things that's going to be able to turn this thing down. This is going to be a multi-year, a 6-month bull run if we can push past this high, if we can push through all this war, all this famine, all this liquidity, if we can push past that all, it's going to be a very bullish year for gold. Just be aware of the liquidity that is sitting up here in this blue box and beware of the 2-spot 1-2 and the 2-spot 618 extension because they are close to each other and those
What
love to
what's
do
the
double tops.
what's the number? What's the figure? What's the
I have no idea. I'm just basing it off of, when you're seeing stuff that it double tops but slightly higher.
right? Okay.
Like we could take this low and then I don't know if this is gonna be, anything. And I don't even have my stuff set up, but you can go through and you could play with, this low to this high to this low and
And then
just
extend
map
it.
your Fibonacci's
Yeah, yeah,
and
yeah.
the 2-1-2 and the 2-6 is real close to each other. So that's
Okay,
all I
cool.
got for gold.
Okay. Okay, so the next one we've got is Bitcoin. And so Bitcoin, this is the weekly chart for Bitcoin, and this is something obviously I've been tracking. So, did a bit of work around the golden crosses. So these are golden crosses, and what happens when you have a golden cross? Um, what normally happens in terms of price appreciation, especially on the daily chart. I did this on the daily chart. So, so you can see we had a golden cross here, right? And we did the golden cross happened here, so somewhere there. And after the golden cross, we did a bit of a pullback. Um, but we had already gone up 40% before the golden cross. And after the golden cross, we'd end up pulling back a little bit, and then we did a 65% after the golden cross, right? Bring it back here. So we did a 30% move before the golden cross took place, right? 30%. And we did a bit of a small pullback here. Um, Let me just make this bigger so you can see. So from here, the golden cross, we had the golden cross happen here, right? So that's the golden cross. So if we actually, this needs to go up to somewhere because this is the golden cross and the golden cross happened here. So sorry, I need to move this up, yeah, because this is the golden cross happened here. Yeah, so it's about, we put it here and then let's see what measurement looks like from here. It's about 40, another 47, about, let's call it 48%. Sorry, I need to change this. 48%. 48% pump before the golden cross. And after the golden cross, we've had a correction. So after the correction, even if we say we're going to get the same, if we say we're going to get the same 65%, that takes you to a target of 144,000, 145,000. So this move is not finished yet. It's very similar to like here when everybody was probably doubting the move here. Here, everybody was doubting the move, whether actually this is going to collapse, this is going to collapse. In this particular place here, I mean, we didn't come all the way back to even the 50-day moving average. We only stopped in the middle of the band, the KC channel. Here, we've come all the way. We've come to the 50, we bounced, we've come back again to the 50. So, I would expect this to continue going up. Maybe, yes, we may come back and test the 50 again, the 50 moving average, which is sitting around 103,642, or even the lower one, double bottom, which is sitting around 102,758. And then we'll be off. We'll be off. And this thing will be going off to 145, 145 Okay. So that's what I'm tracking, and nothing has changed as far as I can tell. Sometimes, as you know, James was saying, sometimes it's just keep it simple. Bitcoin works on a clock, and it would do what it would do always. It's like that. So, and there are subtle differences between the moves. For example, if you're just following this example, you would say, oh, this side, you know, when the golden cross happened, which is here, we didn't come to the nine, we didn't come to the 50, but we only came to the middle of the band, which is slightly different from here. So, subtle differences, but it's the same thing, the same pattern. So I don't expect anything else, but more upside. I don't expect this to collapse at all. I'm bullish on gold, sorry, on Bitcoin, and I don't think this thing collapses at all. Maybe a small pullback to 10, 102, worst case scenario 101, and then it kind of gashes itself back up and we continue going up. So that's what I've got on Bitcoin, and I'm gonna stop and pass it to James. I don't think we can hear you, James.
My bad. So kind of the same thing as last week. We had a decent buying opportunity present itself on Thursday. But those, I don't like to speak like in perfect worlds. This it's really tough to catch. If you're looking for a long position and you see a move like this, what are the chances you're on a 4 hour time frame and you see the Bollinger Band? The chances of that happening are unlikely. And then what are the chances of you trusting this random lower Bollinger Band that has had no weight in the past? We crushed through it here, crushed through it here, crushed through it here. It hasn't been a ping at all since Sunday of the 18th of May. So, for you to go and be like, oh, yeah, this time it's going to be a ping. It's impossible. That's why trading is so hard. It's so difficult. Really good trades only present themselves once every, depending on how good your strategy is, once every 1 to 3 months. And it just is what it is. So it's really hard to jump in on these moves, especially when you've had such of a huge of a bull run like we've had. I remember 2, 3 weeks ago, we were talking about how none of the longs have been came after. These are all higher lows, higher lows, higher lows, off of 3 points here. It's like, it's so tough to be able to jump in. You just got to map your liquidity and play it as it lies. Luckily, we were able to get in here within $200, within $175. It's like, you know, you it's 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 there. You just got to be ready to go out and take it. So speaking of liquidity, our first target was hit earlier in the week when I was in school playing with my iPad. I came up with the strategy that whichever liquidity target we fill and turn back up after we've hit it, that will determine how much upward pressure we have. So I said before this move started, and I'm not trying to toot my own horn or anything, I'm just being honest. Before this move happened, I said to myself, okay, if we go down into this liquidity target, which is, let's just call it liquidity target A, if we go into here, I'd say, that'll give us enough juice to get us to 125. If we go down to this liquidity target and we turn back up and we create a bullish wick where it just gets eaten up, then my target would be 166. So as it lies right now, I think this move gave us enough power to go to 125K, maybe higher. As far as upward targets, I'm not Nostradamus. All I have is Fibonacci extensions. So everyone in the world has access to Fibonacci extensions. Your guess is as good as mine. You take a top, you take a low, and then you take another low. It is what it is. So you might as well just go play blackjack if you want to call out highs, by the dollar. So I just the only thing you can do is kind of use logic and physics and understanding that this is an organic thing. Bitcoin is. It's organic and it kind of has its own logical rules that it follows. And I've been studying it for a long time, and that's what I've came up with is if we get this low, we're gonna go that high. If we go this low, we're gonna go that high. It's just kind of a ping pong game of liquidity and power behind these moves. So this was a mini Black Swan event right here because of world news, what was going on in the world. So if you trade on the news, maybe you could have got that low. I don't know. Some people just have a horseshoe up their butt. But um, just to kind of go into the 15-minute, and this is where entries and exits kind of help with PVSRA and this abnormal threshold volume. You can really zoom in and see what's happening. So right here, if you're high leverage, now I'm not advising you do this, but if you are trading high leverage and you need to make money fast, here's two volume breaks, actually three. Here's three volume breaks right here. Okay, so you take your low, which is this one, draw your line. That's your buying opportunity, okay? You take that long. And then, you set yourself you can't tell yourself, oh, we're going to break out and go to 125K from here. You have to be modest because you have to remember you're on the 15-minute time frame. But, as far as how negative you went for how long right here compared to this move here, it's you can make money with this stuff. Each time it isn't going to be as groundbreaking. You're on the 15-minute time frame. You're not going to sit here and catch stuff, that's going to really do crazy damage. But here you got one right here. Let's draw a low. Boom, right there. These wicks.
Hmm.
So you were in the negative for 0 minutes and 0 seconds. And then you take it up. You can't be greedy with these trades though. These aren't multi-thousand-dollar moves. And it's not always going to work. The candles aren't always going to get filled 100% of the time. So you can draw your top right here and your short opportunity, um which is what this would be, is when it gets fully filled, you go short. It didn't get filled all the way. And even right here, if if you trade like me, you're not touching this. It has to be 100% of the way. If you want to draw a Fibonacci extension from where this started to where this ended and then measure it in a sort of mathematical way like this, and then you could tell yourself, "Oh, I'll take trades at the 23.6%." And then I'll have a stop loss of 0.5% past the 0%. You can make whatever rules you want with this stuff. But as far as me, I would use this to take a short. So right here, here's my short. I went, I don't even know, a $25 into the negative right here. And then we got ourselves a move. So you can see when I draw this line that this is our negative return and then this is our positive return. You could see the difference in time and length. You see less time in the negative, less length in the negative, more time in the positive, and more length in the positive. It's not a 100% strategy by any means, but it's kind of measuring something that can't be mimicked or traded against or, anything else. So, yeah, that's all I got for Bitcoin, and I hope you guys have a great week.
Okay, cool. So I think that's all we've got for this week. I hope you guys find it useful and have a good week. And we'll kind of speak next week when we get together. Okay, God bless.